We see three major key trends. The first one is the continuation of slow growth, and thus the focus on companies with low leverage, the ability to do M&A, but also the ability to do innovation. In particular, focused areas on healthcare and information technology. Information technology, we already had to focus on robotics, on virtual reality, and given the strong push towards Industry 4.0, cybersecurity is coming at the forefront and should drive positively into 2017. And last but not least, the generational conflict. There are two themes to look at. The first one is the pension deficit issue. Low rates, a rising pension deficit, companies will have to close that gaps. And the second one is social housing. In particular, the low rates have driven real estate prices to new levels where a lot of the population cannot afford housing anymore. So we would expect investments there and investment opportunities in that area. I think we have to differentiate between the European banks and the US bank, but last but not least the emerging market banks. So for Europe, we face earning headwinds. Negative rate environment, low lending growth, 2/3 of the bank's income stream is net interest income. That's one of the major drivers. Secondly, the cleanup of the past. The non-performing loans haven't been properly provisioned and litigations haven't been settled yet. Still referring back to the financial crisis, which are a major issue. So we focus on banks, again, that have the ability to be more cost efficient, to do restructuring, but also to invest in digitization and to gain new models in banking. In the US, the picture is slightly different. We have a better yield curve. We have some steepness in the yield curve. We have in particular the low end on the interest rate side in more positive territory. That should be supportive. We as well have a more positive outlook for rising interest rates in the US, which should be supportive. And banks have cleaned up the past in 2009. So a couple of years ago, they have properly provisioned, they have written down, they have now in between even had write-backs, litigations are settled. So we clearly prefer the US banking over the European banking. And in emerging market, I think we're seeing that in particular in Brazil, the banks are coming out of the trough. They had a harsh credit cycle, which is now flattening out. It's coming back to slow growth, not completely out of the wood, but clearly improving. The same picture in Asia.